What's happening, everybody? Happy Thursday. Welcome back. Just after 3 p.m. Eastern Time on the 20th, day after the Fed. I am looking at the SPX on the 15-minute time frame. We are just on the right side of this trend line. The Bulls and Bears are playing some tricks right here. A little bit of a fight. We'll see what tomorrow brings. Thursdays and Fridays, about 60% of the time form highs for the week. So is today the high? Actually, this would make Wednesday the high if we close right where we are today or this week. If we don't get above Wednesday's high, then that would be the lower probability. So we'll see if there's anything left to the bullish side of things this week. It would be kind of nice to see that. I'm looking at some corrective symmetry just on the right-hand side of this trend line. So that would be right over here. So resistance, resistance, resistance. We're on the right-hand side of the trend line. If we have just a little bit of pullback, we're right at this 30% level. It is getting tested. I could see that 30% level offering the bears a chance to retest the lows, but I could also see the break above 30% is right at the daily 200 moving average, and then making our way up into the 38 to 50% zone. So there is a symmetry level. There's a previous low back here from December and January. That is right here. That was a January low on the 13th. If I go to the slightly higher time frame, you can see my daily chart exponential moving average continues to offer up some resistance. So I have this bold black line as a level. I also have the value of the 200 moving average. I did take a look this morning. What's very common also to see is the simple moving average, which is right there in blue. So is it possible that the exponential moving average is providing a better resistance measure at this time? And is it also possible that if we get price to go above it, that we run into this simple moving average or pull back to this 30% or 50% level? So we have next week, I mean, calendar-wise, there's not really a ton of news. I thought we had core PCE at the end of the month, but we don't. This is what I'm seeing for the calendar for next week. So tomorrow morning, not much to go on here other than CAD retail sales. Everything else pretty low impact. This is a pretty major expiration, though. We do have it's a triple witching OPEX cycle. So there's futures expirations, there's volatility expirations, indexes, and stocks for Friday morning. We still have a little bit longer to go to finish up the month and the quarter. Next Friday the 28th, and then Monday the 31st. Next week's news. This is just look ahead for a second. We'll talk about this more tomorrow. But next week, we have PMI data coming out of the Eurozone and the U.S. We have new home sales and consumer confidence out of the U.S. again on Tuesday. CPI coming out of Australia and the U.K. We have final GDP and unemployment claims on Thursday the 27th. I thought we'd have a core PCE from the U.S. Oh, we do. I could have swore that was not on my calendar. Okay, so it is the end of the month, or the 28th, Friday, core PCE. It does show a forecast for the monthly. Let me see if it shows a forecast for the Bloomberg economic calendar. What was that headline? Student loans, state education. All right, curious what that is. I saw something about Elon Musk and an impeachment. Trump's emergency, unleashing American energy. Staking a huge step. Change for Ether ETFs. Okay. Bring liberation of America. Okay. He's still talking about tariffs, huh? All right. Well, guess we'll wait and see what happens there in a week and a half. All right. What was I going to look at? Oh, Bloomberg. Let's go to next Friday, the 28th. At 8:30 a.m. There is no forecast. So the core PCE previous print, let me pull it up here in the economic calendar. Let's go inflation data, PCE. So from 2.8 to 2.6, a little bit of an improvement. We'll see if it's a higher or lower year over year. Core PCE is supposed to be the Fed's preferred measure of inflation. We saw CPI and PPI headline come down, but we'll see. All right, let's keep going. We're hanging out on XSP, still the same thing as the SPX, between the exponential moving average and the simple moving average. A little bit of chop fest going on right now. Everything is down for the day slightly. S&P is down about 1/3, 1%. Equal weight's down about the same. NASDAQ down 0.44. Q's down 0.46. Dow is down 0.06. Pretty flat day on the Dow. Russell down 0.51. Respective Russells, I looked at the IWD, which is for top 1,000 value, top 200 growth, and top 200 value, hanging in there, but still slightly down. VIX faded, slightly lower, just a little bit green on the day. I'm hoping there's like another couple of red days to reset this VIX back into the $16 or $17 handle, or point handle rather. SVXY, I had my opportunity to grab a couple shares. I didn't. It's fine. Yeah, should just bought some shares. Oh well. Currency strength today. We have Aussie, New Zealand getting hit pretty hard. That was at 8:30 p.m. last night. We've got the Euro and Swiss intertwined around the baseline. We had the yen and the dollar up together, both showing signs of strength. They faded a little bit. CAD actually got a little bit stronger today. Oil, a little bit of a move on oil. CL, I looked at a trade this morning on CL. I just didn't feel like taking the risk. It was like a 3 to 4K risk with a structure that I wanted. I still kind of like the trade. I just don't know if oil is going to be heading higher or breaking this floor. So I'm still going to stay long natural gas. That's a diagonal spread. Gold, 30.44. For today, we did poke a fresh high at 30.57. A little bit of an indecision candle. I still like the technicals for an overbought condition, having some type of pullback before we get another leg higher. Otherwise, it just keeps stretching. I have distance on a trade here through the 32.50 level. So basically, I am able to collect some income on gold futures if we stay below 32.50 within the next, I think, maybe 40 days. So here is GC futures. It is currently flat, but I pulled in $1.20. It's flat right now. I'm waiting to see how this plays out. So I've got a bull trap there for $500, and then I have a wider credit spread to pull in the credit. So most I can make in the trade is about $620, and that's a pretty high probability trade still. If I look at the analysis of this, so from 30.80 to 32.55. So delta-wise right now, let me check the deltas on this April 24th. April 24th. My bull trap is at the money right now, and I've got about a 14 delta. So, I mean, probabilities are still favorable. We'd have to have a, I don't know, 1.5, 1.75 standard deviation move for that to be at risk. So hopefully that doesn't happen. Otherwise, I'm still holding shares of GLD and I'm running to the upside. So it's kind of hedged out anyway, but I'd like to make a little income on GC and they get a dip so I can buy some more. Silver. Hey, Sam, how are you? Good afternoon. Who else is out there today? Who's watching? Say hello in the chat. Type it in. We're on YouTube. We're on Facebook. We're on Twitter. We're on Twitch. We're on LinkedIn. We're all over the place. Silver. I just like to see silver continue to make higher highs. So even if it's slow and steady, pretty good support. Get rid of this guy for a second. So pretty good bull market on silver. It's slow, it's steady, but I like the measurement. This first level right here, I've talked about this for the last couple of years. This swing, this is a low to high. This is a higher low. I'm looking for a higher high up here. That's target 1. If this is a wave 1, 2, 3, what I'm hoping for is that a wave 4 is going to be minor. So having like any type of pause or pullback, any type of correction in here for wave 4, and then wave 5 gets us up into the 50s, or I should say high 40s. Mid to high 40s would be my profit target too. That's where I want to be officially kind of taking profit on silver. So pretty good chunk in the portfolio for silver. Shares of, let's see, GLD is up around $15,000. PHYS, that is a little spot trade on both gold and silver. That's up $2,800. And then SLV is still up $18,000. So nice little chunk of diversification, holding on to some profits. Hopefully there's more to come. That's about it. Bitcoin sitting at 84,000. Again, a lot of indecision on the day. Trump was supposed to have some type of speech today with some digital asset conference. I'm not exactly sure what that was. He was on the calendar for today around, where was he? Somewhere here. Thursday. There it is, 10:40 a.m. Due to speak at a digital asset summit in New York. So I didn't see any headlines. I didn't see any jumps on Bitcoin. I don't see anything here. Blockworks Digital Asset Conference vowing to make U.S. a Bitcoin superpower and pledging not to sell confiscated Bitcoin while easing regulations. Okay. I mean, if I don't know if this is going to pass or not, but the whole idea of like this strategic reserve, which is basically about confiscated Bitcoin, it's like they're just moving from one ledger to the next. I think the big plug for Bitcoin would be if the U.S. government somehow was going to start buying Bitcoin. That would be different. That's not happening. So I think that's why the news has still been mixed, and that's why there hasn't really been any headlines or tailwinds for Bitcoin. And on top of that, we have the market still at a standstill with risk off. After the big slide from February, March, there's still a lot of uncertainty swirling in the air. MicroStrategy hanging in there. Got a collar trade. I'd love to close this thing out for a profit. 310 is my covered call. 200 and 220 I have puts on for a collar trade. Coin, I want to check and see. I think my expiration on coin is next week, not this week. Let me double check that. I know I have a potential assignment coming on Tesla. If it's not above 355 by tomorrow, then I'll take some shares. I will aggressively work the cost basis down, or I will debate on either aggressively lower the cost basis or put in a collar trade so I'm protected to the downside as well as the upside. Just depends on what type of premium I can get for that. So I'm going to own shares of Tesla on 247. As long as I'm protected, I might be willing to go out to like May. That's a through earnings play, especially. That might be important. We might have like an earnings push. Late April, I think, is earnings on Tesla. So let me check on what was the trade here? Coinbase. So Coinbase, it is next Friday. So if we're above 195, there's some profit here. If we get back towards 195, this actually could be really nice because I got a $5 profit trap from the 205 to 200. So if we can get back to 195, that'd be pretty fantastic. So I can keep the $1.08 plus a $5 trap. That'd be a nice little bonus win. And then April, same thing. This one's even further because the volatility was down. So this one is a similar trade, 111 strategy for a 155 sell put. This one's actually in profit. Max profit here is 225. I'm already up $62, but I'd like to hold out a little bit longer on that one. Okay, that's some Coinbase. What else? Copper up to some fresh highs in the day. Japanese yen sideways. Copper, any dips and pullbacks, I wouldn't mind putting on some positions to buy. So if we pull back towards previous highs of copper, I may look for some copper futures similar to this. Below the low, price is going well. This is like 98% of my max profit. I'm just going to let it expire. And if we have another dip or pullback, I'll probably look at the same thing here. So I'll just move this up to a higher low. Similar structure, risk probably a grand to make, $200 to $300. So an income trade that should be pretty high probability. The only thing that makes me nervous about copper is this would be an all-time high, but momentum is looking pretty steamy on copper. If we break these highs, there's not much stopping it. This also would be a reason that I think, even for right now with the current environment of all this uncertainty, I don't, unless copper, hits this resistance and just drops so hard. If we break these highs, this is old Dr. Copper saying no recession. No recession globally, no recession US. The US might be in for some more pain and testing these lows again, but I think at some point you're going to have Trump and Fed fiscal and monetary policy aligning for at least some sort of assurance to the market that we've got a bottom in place. But we will find out. Do you like copper directly? No, because I do have a play on FCX. So I'm in FCX, but this is very similar to also trading gold with gold miners. It just doesn't work the same way, doesn't pay the same way. I'd rather be a part of the spot market, which is going really, really bullish. So HG, I just trade copper futures. Same thing on gold. I trade GC, I trade GLD because it is the closest thing that resembles a spot price of gold. Nikkei, my EWJ positions are positive. My FXY, I'm still looking to see. Let me just set a chart on here so we can break these highs. I'm reading some news in the rumor mill about another potential deleveraging in the Japanese yen. Maybe, maybe not. I mean, it was a little surprising when we saw it happen this last year. If the Bank of Japan starts to raise rates again, which they didn't, like this last week, they kept rates the same at 0.5%. If they start to raise rates again, that might put another wrinkle in this potential deleveraging, and we might have a revisit to this low to high, maybe a higher low to higher high. There might be some symmetry there. We might pull back and find this yearly moving average. That could also create some more pain for the. I mean, this hasn't hit. Is this right? Are you serious? Holy crap! So we haven't hit the yearly moving average since 2021. That is really interesting. Again, I'm not saying that I want to be bullish to that level, but this is why I'm just holding on the shares as opposed to trading Japanese yen through the forex market, which is going to basically give you, paper cuts every day for financing because it's negative financing, negative swap if you're holding Japanese yen for strength. I know a lot of traders that has been buying against the yen, holding against the yen, trying to hang out of that swap trade. I'm only doing that against the Swiss. I think the Swiss, since they just cut rates to 0.25%, I don't mind hanging on to my carry trades with the Swiss crosses. But anyway, FXY, I'm holding some shares. Let me check on Japanese yen futures for a moment. I might put in another trade. I had a pretty good trade earlier this year on Japanese yen futures. I want to check the contracts. Well, they did add a couple more. The only time I could go out earlier was September. Now I can go out to December. Let me see something here. So if I were to buy a call, sell a call, that's not bad. That's not bad. So I don't really want to risk more than that. I don't know. Let me zoom in here on 6J. I would like a bit of a pullback. I just think this is a necessary hedge. If something goes wrong this year, and the Fed starts cutting, if the BOJ raises one more time, I could see there being a bit more of an unraveling with the Japanese yen. I could be wrong, but this to me is a pretty calculated risk. That's not a bad trade. It's just a bit more risk, bit more reward. Maybe if I go one strike out of the money here, that's about a 2-to-1. So I'd risk 662 to make 1212. Percentage wise, I mean 0.0695. 0.0695. I mean, if we just see this like steady appreciation, I don't know. I still like. I like the trade, but I don't love saying that my time to be right is December 2025. That's my only hesitation. If I could go to December 2026 or January 2027, I put this trade on a heartbeat. The trades that I'm like, look, I think longer term, I've got a window to be right. So TLT, I'm doing this. UNG, I'm doing this. Pfizer, I'm doing this. That's kind of it for right now as far as my portfolio mix. But I do like the Japanese yen for that play. I don't feel like December 2025 is going to offer up the window. I mean, it could, but that means we'd have to have that deleveraging again this year. Maybe we do, maybe we don't. I mean, the Fed is likely to take some action this year, possibly cutting rates. But I just don't know. And summertime things are usually a little bit slow. Sometimes it gets exciting through July and August, especially in the currency market. We've had more flash crashes through, August and end of year things when the markets are pretty low volume. So it certainly could happen. We could have something like that happen all over again. But to be safe, I mean, I already made I think it was a trade that I was risking about $600 to make $1,200, and I closed out for like a $700 profit. So that only took a couple months. Anyway, I'm just kind of talking myself into. I don't like the timeline of being forced to say, if I'm right, I need this to happen by December. I think it's a good window, but I'd like to risk a little less if I could. 650 is not bad. It's still less than 1%, but um, this would be another. Just trying to think of any other reasons I would talk myself out of it. Well, this would be a reason. If we pull back, then I'd rather see this. If this is going to set up, and this is something similar to the dollar yen. If we have the Japanese yen futures here pulling back for a kind of a head and shoulders look or some type of crown, then I'd obviously rather get long here for a type of swing trade, right? So if this is a swing, we're setting up some type of bullish pattern here, then perhaps any type of pullback sets up for the better run, right? And you can flip that around and see that is potentially the case with the dollar yen, because we did have this taken out, and this would be the swing from high to low, left tip, center tip, pull back again, drag some fibs from this high to low. It wouldn't be a terrible trade. So going from this high to low and then just waiting to see, does the market turn at the 38%? Does the market turn at the 50? Does the market turn at the 61? Right? I mean, that would be the sweet spot, or even back into this like 70 to 78% zone. If the market turns in here and heads back down, well, that'd be a good spot to start timing some of your Japanese yen futures trades, which is probably what I'll end up looking at. So I'm willing to hold out a little bit longer. If the dollar yen pulls back, okay, cool. If it goes lower from there, then I'll probably look at a fresh position on 6J. All right, I think I spent enough time on that. Let's go currencies for a little bit. Actually, let's keep going down here. So what else do we have? Got some Mag 7. How's our international market doing? We got Germany chopping around here near the highs. FEZ is Euro stocks. FTSE is still pretty well supported. Argentina, I'd like to see a pullback towards the 200 moving average. China made a fresh high yesterday, pulled back a little bit. Brazil, I like Brazil and Latin America for some diversification. We are basically trading. This is Brazil, EWZ, basically trading this at the lows from 2020. Not exactly, but just off of those lows. So COVID lows, you've got the 2016 lows. So I've got some EWZ portfolio exposure and ILF for Latin America. Mags for today was up and then faded. I think this is part of the reason the market also faded with it. We take a look at the heat map today. Heat map is pretty mixed. We had basically a lot of flat movement, and then everything's kind of turning red. So yesterday, by the way, I don't know if anybody saw the heat map yesterday. It was like 75% of stocks advancing. It was a pretty big broad market day, but arguably a low volume day. So everything was up. It was kind of a low volume day. We are coming into today with a bit of a mix. Let's go, advanced decline. 62.3% of stocks declining, 33.9% advancing. Some of the bigger sell-offs would be AVGO at 3%. Nothing really bright green today outside of DRI. I'm guessing that was a positive pop in Darden Restaurants. That was up 5%. Let me see what that looks like. And it's probably fading, but let's go to DRI. I looked at this one for an earnings play this week, and it just didn't have enough movement. Like I needed to see like a $15 move, and it's only been up about $10. So, but is this a top on Darden Restaurants? It certainly could be. So we missed on revenue. We popped to the upside. Let me see what fair value is. I might actually look at a short here, DRI. Trading below estimated value. Okay. So it's not overvalued. Earnings forecast to grow. This is a good indication of the consumer. Price to earnings not terrible. I'm curious what it is against the peers. Trading right around fair value. We did pop up here to 198. So, technically, I guess today would be considered, just at fair value. Compared to restaurant brands, Yum China, Roadhouse, Domino's Pizza, whatever Chipotle is. I don't know. It's not ridiculous. I don't know if this would be considered. This is, it's just restaurants. So I'm like, this wouldn't be consumer staples necessarily. People are going to pull back. They'll pull back from going out to eat. So anyway, let me see what the premiums are. Volatility, 33.7. There may be something like a vol crush after earnings. Maybe looking at an iron condor perhaps, or even just a, let me see if I can get like a fancy little call condor. So let's go out to April 17. Oh man, these are 10 wide. This is not going to work. If I buy, sell, that's not going to work. Nope, never mind. Premiums are terrible. If I were to do a 210 by 220, and down here a 180 by 170, it's not a terrible play. So I get $1.52 for risking 800 bucks, 72% chance of profit. There's more risk to the upside based on today's push in earnings. I just don't get the premium that I want going any higher. I get 38 cents credit. That's a big drop off in credit. If I move this up to 185, 175, that's a little bit closer, but still it's a lot of risk for not a lot of reward. I will pass. All right, Apple. Apple, I closed out for some profit this week. This was an income trade, and this one I have out to April. Amazon trading at 194. I do have some trades running on Amazon. They're out to May. I think they're out to April and May. Let's go Amazon. I have a May ratio spread. Let me take a look here. We've got a 43.6 IV rank. We're sitting around fair value. We could certainly go a little bit lower, but I may look at a 111 down here, somewhere in like the 165 to 150 zone. I would be happy to own some shares of Amazon if we had that type of discount. I know it's subject to more of a sell-off. I mean, it's already down 22%. If we came down to this August low, that would be a 35% correction. If we came back to this 2-year or this 1-year moving average, something between like this, I don't know, 150 just seems pretty solid. Fair market value on Amazon is up in the 300s. So it checks a lot of boxes. Price to earnings is not awful. And fair value is 357 bucks. So compared to, I mean, Alibaba, which I'm still long in, 19.4 times earnings. JD also, China, 11.4 times earnings. Like, yeah, Amazon might be a little bit more expensive, but Amazon is global and their AWS continues to grow like quarter after quarter. It's not just a consumer company. I mean, I think it's logistics on top of that. There's also, I mean, there's an AI component to Amazon. There's probably the robotics phase for Amazon. I wouldn't be surprised if they go through the humanoid phase in the next 3 to 5 years. If assembly line / warehouses are starting to show more automation. So anyway, it's been one of my long-term favorite stocks. So let me see if I can find an income trade based on this little sell-off, something around this like 160 to 150 area. Let's see here. I have a trade out to the 150 buy by 150 out to December. I pulled in 237 on that one. This is a May one, a 180 by 175 for $1.39. So if I throw in another trade, let me figure out what expirations I like. Maybe a June, maybe a July. We have earnings April 29th. June, July, 90 days out is reasonable. Let me see what the 150 looks like. So we get $1.05 credit on this one. Could I do 160 by 150? That's 91 cents with an ownership at 150. Or 155 by 150, which is basically a 10% chance of assignment. Turn this into a ratio spread, get $1 for it. It's an income trade. It's not fancy. But I think it's an income trade to fill in some of the gaps. So I've got an expiration in May, got an expiration in December. I can fill some gaps in here. If it goes lower, I can sell more premium. But right now at a 43.7, I think this is fair to take a trade. So if I want to own it a little bit higher, $1.33, to me, I'd rather have the lesser assignment, higher probability trade, 95% chance of profit. I'm going to take this trade. Am I adding to EWZ? I did. I added more to EWZ, ILF, SCHY over these last couple weeks. I'm looking at just the ways to diversify out of the U.S. in case Europe and China. Europe, China being the main catalyst for non-U.S. flows right now. Okay, let me see if I can get in here for at least $1. I wouldn't mind having some shares. If I own shares, even on some of my IRA accounts, I've got the cash flow for it. So let's go, let's see, 1, 2, 3, 4, 5 accounts. I'll take that. So making income, it's $500. And let's see if I can add that up. So the 155 by 150 for 2 contracts, get over $1 for it. All right, let's get after that. So would I own some shares of Amazon? Yes. I'm going to go 2 contracts for this one. There. So now it's a $200 income trade. There's also a potential profit trap. I would take on the risk. So for my portfolio margin accounts, I'd own shares at 144. It'd be about 143.97 would be my ownership price. 200 shares at that price will go 144, give or take, times 200 shares. So tying up a little bit of cash and buying power, but I like the income trade. So, okay, all right, I'm going to take it. $1.03, $1.04. Hopefully I can get filled in this one. Let's go $1.04. Got filled for $1.03. Okay. Similar, and then this one is an IRA account. Let me edit this one down. 15 grand on that. All right, I'm good. So I'm going to take it on these 4 accounts right here. All right, so I'm building that out one for Amazon. It looks like this. If I go Amazon, going out to, let's float this guy up here. Let's go Amazon for ratio spread. So I'm buying 1 and I'm selling 2. Expiration was the June 20th. I'd be buying the 155 and then selling 2 at the 150. Looks like that. These are both puts. There's the trade. So current price 194. A 1 standard deviation move is right here. So 1 standard deviation, which should incorporate about 70+% of market moves, would keep the $3 credit. We go a little bit further than that. This would be a 2 standard deviation move, which might force me to take on some risk. I do have a profit trap here. If price is 155, 154, 153, 152, 151 to 150, I don't take any assignment unless price is less than this. So I get a $1 bonus here, $2 bonus here, $3 bonus here, $4 bonus here, and a $5 bonus here. So, I pulled in $1.03. If possible, and I finish in this ratio area, I could have a bonus profit of anywhere between $1 to $5. And, it's really just an income trade. So about a 95% chance of profit. I like the trade, and that's what I'm going to take it. Let me get this out of the way for a sec. There we go. Okay. So that's a little Amazon. Let me throw that in my tracker. Amazon. So a June 20th expiration, buy the 155 put, sell the 150 put, $3 credit, willing to own AMZN shares. If assigned, it would be, I think, 143.97. So 150 would be the assignment, minus 5, minus $3, 143.97 would be my break even. Okay. So taking the trade. All right. This one's going out to my Project Options Edge members. Amazon, June 20th expiration. Buy the 155 put. Just typing this up. I am willing to own Amazon shares if price is less than 150 by expiration. The break even price would be 143.97. And there's a potential $5 profit trap from 155 to 150 with the long put. Okay, the trade is in. Amazon. Okay, check on the day. Got a couple more broken wing butterflies. I like Amazon. Trade is in. Now let me add this up to the chart. This is a June 20th expiration, 155 put, 150 put. There we go. All right, AVGO, Broadcom. I actually want to take a look at SOXX. This is kind of the infrastructure AI play versus the other one that's so heavily weighted on NVIDIA. 201, this isn't necessarily something I want to own, but an income trade, I'm not terribly opposed to it. IV is 19.7. Ugh, that's nothing. That's actually quite low. Oh, I don't know. Could be an income trade. I just don't know if the premiums are that awesome. If I go to current prices, yeah, these premiums are probably terrible. I think that's why I took the trade on SMH. Ivy ranks a little bit higher. This is way more liquid, way more choices. Probably just because there's so much weight of Nvidia, it just adds more liquidity to it. But SOXX, not a bad trade as far as like AI infrastructure, but nobody knows. We might get lucky and just bounce off of this trend line, something like that, like an outer trend line. If we go high to low, lower high to lower low, maybe finding some support in here before I look to buy. Peter, most likely I'm going to hold that one towards expiration. I don't mind owning it. In fact, I mean, if I could own shares of Amazon, which I do, but if I could own another chunk of shares from a discount at 242 all the way down to 143, that would be quite the discount. I mean, I'd be holding shares around 41% off the highs. So, yeah, I mean, I like that trade. So if I own shares at 143, I'm not saying that I'm going to hold it all the way back to the highs. But if I own shares here, we get back to the highs, that's a 68% return just to get back to the highs. I think if you give Amazon time, it's it's a $350 to $400 stock at some point. I think it's a $500 to $1,000 stock at some point if you give it time. So my plan would be to hold that one towards expiration. Okay. All right. Google. Just have some dollar cost averaging and some income trades. Once Google sold off like hard with the kind of the quantum computing flop, this one is going to be full profit. I closed this one out. This was this week. So Google right now is just further out expirations. So I have a ratio spread for December, ratio spread for May. IV is a little bit higher. I have a cash secured put at 130. Let me just label this one so I see what I got. This is a naked put. I collected 254 on that trade. It's up over 46% right now. And then I have a long way out of the money put, which I don't really know. Oh, I know why. Because I did is that why? One, two, and a hedge. Maybe that's why. So it's not a ratio spread. I think it's for buying power. It doesn't matter. Ratio spread's pretty much the same thing. So I pulled 280 on that ratio spread. I paid 14 cents times $7. It's going to be like $80. Yeah, I paid $1 for that, so I can still make $1.80 on that trade. Anyway, all right, moving on. Meta. Oh, interesting day. I thought I was missing the game here. If anyone was in my morning sessions, I was like, Meta popped, right to the upside today. It wouldn't have mattered if I put in the trade I talked about yesterday in final hour. It was a 580 by 585 or 585 by 590 bull call spread. I was going to go out maybe 2 to 4 weeks for that trade, and today it'd be right back to scratch. So I'm going to hold off on that. I think we could get a meaningful bounce here off the 200 moving average, but if we see another leg lower in the stock market, we're gonna rip through this 200 moving average. So I could see us. I mean, this is probably the scary part about the current state of the markets is we've got the major indexes below the 200 moving average. Let's say that Facebook, off this 200 moving average doesn't really hold it. Okay. And what we do instead is we have another slide lower, and then any pullback would be a sell the rally type look, technically speaking. So if we continue to slide and put in some more lows, any type of rally would be most likely a retracement rally, a sell the rally or sell the rip type thing, and then see if it maybe goes lower. But anyway, I like it. If we go all the way back here, go all the way back to the bottom in 2022, I mean, I would be pretty intrigued of a like 382 to 618 zone of looking for bottoms in Meta. We come back and fill this giant gap right here. Same thing. I mean, find me some fair market value. So what is Meta trading for right now? I mean, it checks a ton of boxes. Still trading at a pretty reasonable multiple. It is a cash cow. Fair market value at 897. I mean, it's arguably on sale. But man, if there's a chance to own it cheaper, I'd love to own it cheaper. Seriously. I'd love to own it cheaper. So 23 times earnings, Microsoft at 31, Apple at 33. These valuations have come down quite a bit. In fact, this is a pretty good example of why the market needed the fall that it did. These valuations were way too high. When Warren Buffett bought Apple, I think it was like 5 to 10 times earnings. Now it's 33 times. It was over 40 times earnings. So that earnings compression / revaluation has helped. But it obviously created a lot of pain with the markets falling that heavy amount of concentration. So anyway, I think Meta's fine. It's a cash cow, but I don't love right now unless it was a little bite. If I said, okay, I'm just going to buy $1,000 worth of Meta right now, and if it drops to, let's say, 480, another $1,000, and 380, another $1,000, and you look at longer term, then sure, it's a great trade. So there are ways to kind of dollar cost average into Meta. But if we have more of a broader market slide, Mag 7 is going to continue to feel the pinch. until they're so undervalued again, or there's so much fair value that it's like, well, these are some of the greatest companies that the U.S. market has, and it's silly not to have them, you know. So anyway, we'll see, but I'll wait a little bit longer. Microsoft hanging in there. I do have an income trade out to April. I did take some profit recently, the 14th and the 21st expiration. Microsoft was a nice little winner for me, just generating some income. This is a trade out to April. I pulled in $2.30. This is out to the middle of April, and I'm just gonna wait on some income there. So Netflix, I have two trades running. This is going to be for full profit on Friday, so this will close out tomorrow for 256 credit. I also have a broken wing butterfly up here at the highs. I don't think we're getting to the highs, and we may not get to the lows. So I looked at this morning, maybe taking a bear call spread here and looking to see if this will flush lower, but I don't love the trade. You know, I basically got it so I could pay $500 to make $500, and it's fine, but I don't know if I'm going to get the move that I want. So I'll take my win up here. I'll take my win down here. This one goes out to April. This one is closing out this week. If Amazon has another slide lower, which I'd love to see it happen, if we go high, low, lower, high, lower, low, if we hit this 200 moving average, again, there's a monster gap down here. So just don't ignore this stuff. You know, this has been on a rip since the bottom of 2022, and just don't think for a second here that this market can, you know, stop going down. I mean, the last major level of resistance was here around $750. So if we go high, low, lower, high, lower, low, great spot of resistance to offer up some support, start taking some bites, fill in this gap, find me some efficiency. Could it pull back more? Sure. Anything can happen. But man, it's just a good spot to start taking some bites and then having some upside potential. And that's one thing I've missed the most in the U.S. market is we're sitting here trading all-time highs, all-time highs, all-time highs. Now that these markets are dropping, it's like, okay, let's come back to some reasonable levels. Let's find some technical reasons to add some exposure. So I do like Netflix. I'll continue to take my income trades. But if we have another leg lower, that's just going to increase volatility, which is good. So I'll start selling some more options, similar to what I did right here. And I'll go out another probably 60 to 90 days. If I want to take any ownership, I'd love to own this thing. 700 or less would be fine. 500 or less would be ideal, or not owning it at all and just taking a bunch of option trades and generating the income that I want. Okay, Nvidia up to it's actually positive on the day. This one is, I mean, I think Nvidia is important to hang in there. I think there has to be some built-in resiliency to Nvidia. If we have another leg lower in Nvidia, that's going to be a problem. It'd be funny to see how this market would just kind of dump the whole notion of AI so quickly. And you know, you're gonna have people that are saying, "I told you it was a bubble. AI was a bubble." It's not. Like, I think AI it represents so many things, but AI as a whole, as far as like just tech and the future and efficiencies and productivity, it is happening. I think the energy side needs to be improved. You know, this whole idea of like unleashing energy and deregulation is going to be really important to have the proper infrastructure to then be an AI contender in the near future. And this is where this is right now what like US and China are facing off on. This is a big run to AI is a global thing. So I think there is an AI arms race. I think there's cybersecurity needs. It just depends on how this current market takes it. But Nvidia might, you know, stay resilient and still offer up some really good trades. I'm not loving the technical side of Nvidia right now based on us going to lower highs right now. We're still making lower highs. We're still making lower lows, right? So this is like a very orderly look to it. You know, when is it that the bottom is in? Well, maybe it's here, right? Maybe it's this like $60, $70 area where it gets overextended and then it becomes a really nice opportunity to get back to the highs. I would be willing to do that. I sold a bunch of premium at $75 and $70 that I don't think I'll really have to take any assignment. But if I did take assignment, I would be obviously okay owning shares there. So anyway, that's that. Tesla 235. Tomorrow afternoon at end of day, I will likely take an assignment here at the 255 strike, and that is okay. Stay tuned for how I manage that one. I'm just going to take some shares and look to calculate my break even, which is going to be around 247. And I'm probably going to consider, I don't really want to consider a collar trade because I'm not going to get the premium that I want for it, but I am going to consider at least getting the shares called away for maybe $500 to $1,000, and then having the downside protected out for maybe a 60 to 90 day expiration. So if I have a little bit more downside here, I want to be protecting that downside. And if I go from a 247 down to like a 200 ownership, sweet. Like that to me tells me that this little correction, this structure area, somewhere back around maybe 300 to 320, I wouldn't mind taking 100 shares up $100 a share. That'd be pretty nice, you know. But I don't think calling the bottom on this is good either. And I don't think having shares at 247 means that the floor is in. So just selling premium, it's like I could be selling, and the price just drops. It could drop faster than what I can actually, sell my covered calls for. So probably the smartest trade would be, because it's an expensive stock, to make sure I have upside value if it gets called away, and I have downside protection just in case. Okay, so we'll talk more about that tomorrow. Berkshire Hathaway all-time highs. Bonds up on the day, but faded hard. So it actually is still clinging to a 0.08%. Interesting move on bonds today. Yields, indecisive. So we had lower yields and then they came back up. I'm hoping that the 10-year continues to fall a little bit. Let's go to currencies. Let's see what China did. Alibaba falling a little bit. Baidu, big reversal on Baidu. This stock just can't freaking catch a break, man. Up and down and up and down. I mean, I hope this continues to at least get back to these September highs. A lot of the China stocks have done that, and this is my target. The nice thing is at least my collar trade with the 100 and 105 covered call is still in play. So I'm not going to get it called away, but I'll be watching this stock pretty carefully. FXI fading a little bit. KWeb, same, not quite to the September highs. JD, I did roll out to May. Let me double check this one. I think I need to update my chart. So I rolled this out to May 16th. So this is rolled to May 16th. And it's a 40 covered call. Break even is 34.77. So as long as we say about $40 out to May, I get this called away for $5.23. SEHD, SEHG, SEHY in those Schwab investments. So looking forward to some diversification. They're also pretty cheap. I mean, the growth one is like holding some tech. The dividend one is like holding some Dow, and the SEHY is holding non-US. I think it's a pretty good play considering those ETFs are only $25 to $28. Advanced decline line. Let's look at the stocks above the 50-day. As far as market breadth goes, I've talked about this. A timing indicator for me as far as like, the Fed put, Trump put, where's the market going to bottom? Right now I don't think the bottom is in. And I say that because April 2nd could bring in a little bit more short-term pain for the market. But if we come back into these lows, I'm pretty interested in this being a chance to buy the broader market. You can pick individual sectors if you want to, but I think the broader market to me looks pretty attractive just to find some S&P as an index, SPY, XSP, SPX, looking for an opportunity to be bullish. Okay, same thing on the NASDAQ. NASDAQ above the 50-day, still possibly not enough pain yet is in the market, but watch and see if this offers up some really good timing to then get long. What I don't know is like if this ends up coming lower, how much lower is the percentage of the S&P? How much lower is the percentage of the NASDAQ? I don't know. I would imagine that the S&P, so let's just say SPY, we already had a 10.3% correction, right? And the QQQ was around like 13.8%, I think. So it was down 10.3, down 13. So what's the next leg lower? If we have another flush down to really get this kind of great timing indicator, I could see the SPY going down another 5%. I could see the Qs going down 7 to 10%. So that'd be a 15+% haircut, possibly a 20 to 23, 25% haircut. And I think that's enough near-term pain to see this market is ready to find a bottom, hopefully. But I don't know. So it's probably nothing I would like load the truck up on and go crazy trade sizes, but I would definitely take some bites. Okay, so Broken Wing Butterfly today for daily profit play, another winner. Bonus trade, Broken Wing Butterfly, pulled it in for 50 cents credit. So this has been entry 50 cents credit. Closed 0 cents debit at expiration. So taking the winner there, adding that to the tracker. Okay, we got a sweet little hot streak running. I think we're officially in the 30s now. From 97 to 65. So I've got from 97 to 65, 32 trades. We're 31 to 32 right now. Not too shabby. And the one that I lost was actually a hedge on the day. So I kind of sacrificed it in the grand scheme. I had like a $1.20 broken wing butterfly, and I threw on a hedge for 50 cents, and it ended up working out. So I netted 70 cents. Let me go to update my little tracker here. $31 for 32. Not too shabby. Two for two. 31 for 32 for March. And how many trades for this week? This week would be the 17th to the 21st. 17th. 1, 2, 3, 4, 5, 6, 7, 8, 9 for 9 this week. Not too shabby. Okay. There you go, John. Love it. Yeah, I had a member in the service, Randy, that just messaged this morning and said he just took his 100th win, maintaining a 90% win rate. 100th win. That is fantastic. I'm trying to think, since the service started live, let me see how many trades we've taken together. We've got to be we got to be close to 200 trades. Got to be close. Let's see here. I'm going a long ways back in the tracker. So 564. Yeah. We have taken 797 minus 564. We've taken 233 trades in the service, maintaining about a 90% win rate. Pretty good. Cool. All right. Posted a new trade for my Project Options Edge. That's a trade in Amazon. Took another winner on Daily Profit Play. We still have some levels to watch for Waterfall, which may end up requiring just to sit and hang out over the weekend. But that would be mostly on XSP for the 550 level, which honestly looks pretty darn good. So even with the market closing tomorrow, I mean, as long as we have like a stable chop, I mean, hopefully it's just stable choppy, no major news. Now that it's post-Fed, we have PCE next Friday. We've got April 2nd tariff stuff. If the market is just no man's land for right now, that's kind of good. We have a major expiration tomorrow. It'd be lovely to see the market getting back up to squeeze higher. Right now, some of those trades. So this trade needs to stay above 550. It's only upside down $30. I just need a little bit more time. This trade to the 28th is actually starting to show some profit, but I want either the full 48 cents or I want the dollar profit trap. And I want both, actually. So it's next Friday. We'll see how this plays out, but this one hopefully will start offering up some more profits rolling into next week. So Waterfall members, hang in there with me. Hopefully we got some good profits ahead. Okay, I think that'll do it for today. Any questions, any thoughts, any final requests before I go? I appreciate everyone. If you are watching this for the first time, whether you're checking it out live, I'm here almost every single day, 3 p.m. Eastern time for the final hour session. Appreciate you liking and subscribing. So that helps. That gets my video and these live sessions out when people are on YouTube. It gets them under that little search column, so they can click on it, whether we're live or this video is always recorded and archived in my channel. So check it out. If anybody wants to check out some free education, just last week, the week before, I did a free strategy session on trading options. I've got options 101 videos. I'm trading Forex videos. I got support, resistance, equity management, adding to winning trades, using technical patterns, trend lines. So just some time-tested stuff that I've used over my career. and that's all on my channel somewhere. So Trading 101 education series, keep it seriously simple. You can check those videos out. Okay, yep, triple witching tomorrow. That is true. That is true. And I don't know what it's going to mean. I mean, a lot of times the triple witching stuff, I don't know when that actually starts to, get priced in. Sometimes it matters, sometimes it doesn't. We might see tomorrow actually give us a directional move. That might be a reason to stay out. I mean, 9 for 9 for the week in daily profit play might be worth staying out. I don't know. We could have some silly price action tomorrow. I would like to say, since we had a high on Monday, high on Wednesday, I'd love to see the market stretch up and make a fresh high for Friday, even if it's this, just a little fresh high for Friday, and then go into the weekend. And then we have like one more week before tariffs. We only have PCE on Friday, but I'm hoping that this just holds. If it holds for now, I'll make a little prediction here. It wouldn't surprise me, and this will just kind of show, kind of pure efficiency to the market. This obviously is a nasty sell-off, and it felt crappy for 4 or 5 weeks. But if this market, with that sell-off right there, ends up getting back to this 50% handle going into this April 1st, April 2nd week where Donald Trump is going to announce his next round of tariffs, whatever it is, or retaliation tariffs, if we're sitting around the 50% zone, that shows how efficient this market is right now, like ready to go to battle. Right? Because if we're here, look, the bulls can go up, the bears can go down, but right now this allowed pretty much everybody in the market. Those that were bearish got paid. Those that were hedging got paid. Those that were battling back here are getting paid. And then the market can be neutral, and then the market figures out where's the next leg. I do think that structurally there is another leg lower. I think it's very possible. But like I said, I'd love to see this market just fight back a little bit. Just fight back a little bit. If we come into that end of the quarter, right around this like 570, let's say 5750 to 5850 area. I mean, to me, that's amazing trading just to be technical and say, look, this market slid, came back 50%, and now it's going to be who wins. Is it bears that win? Is it nobody wins? Is it bulls that win? But that's what I'd like to see. If it's possible, that would be a big like tip of the cap to the market powers and the efficiencies and how much liquidity is in these markets to show like they're trying to hang in there. But that also gives everyone a chance that was caught wrong-footed here, gives them a chance to get prepared for maybe another leg lower. So that is a lot of heavy de-risking, and that's exactly what I've been doing in some of the trades that I don't love. And I'm certainly not looking to do anything like crazy long-term right now. I'm looking to try to just keep trading, generate income, and grind. So, okay, sounds good. All right, thanks for being here, everybody. Appreciate it, and we'll see you on Friday. Thanks, everybody. Have a good day. Bye.